live stream about smarter web with Andrew and myself. We got a lot to talk about today, so we're excited to go through the latest happenings and the road ahead for smarter web. So Andrew, it's been quite a busy and productive month or so, and I figure we should start by recapping probably the two most notable new developments for smarter web, at least in my mind, and you can add to that if you'd like. And that's our index inclusion and also our recently completed acquisition. So maybe we start with the acquisition. What happened? What is it? Why does it make sense? And what are you excited about with it?
Yeah, so when we first IPO'd the company, we explained our 10-year plan, and that's something that everyone's familiar with. And part of that is that we want to grow the operating business through organic growth and acquisitions, and that allows us to generate more revenue, which we can use to contribute and in time hopefully exceed costs. So we've become more stable as a business. So we obviously believe in Bitcoin, and on average, we believe that it's going to do 30% a year, and that's tied in with the theory that we've got of buying businesses for between 3 to 4 times the sort of the current value, or how we define the current value anyway. So Squarebird is an agency that I've known since it was created, not well, but from a distance. I've got tremendous respect for the two brothers that set it up. I've followed their progress from a distance. And then last year, the opportunity came to speak to them. And they were very interested in what we were doing. They wanted to further their careers, to find a way of crystallizing value as well. And it's a great opportunity. It's actually an opportunity that can be repeated many, many times, which is obviously part of our strategy moving forward. So we spoke to them, and we tried to thrash out a deal that we felt worked for our shareholders, worked for them as well, because obviously we want them to continue running it as they've been running it very, very well for almost 10 years. And we were delighted to announce it. It's something that doesn't show up directly in our Bitcoin analytics, but I was speaking to somebody when I was over at Strategy World in Vegas, and without any prompt, they made the point that, that's accretive to our business, just as, selling equity at a premium is accretive, and other such things. So yeah, it's everything that I wanted. Low risk, increases the revenue significantly, over 10x actually, and it's a good thing.
Yeah, revenue and operating profits, and correct me if I'm wrong, but at the cost of about adding 1% to our balance sheet, and so I think that's a trade-off that makes a ton of sense strategically, to 10x operating profits for 1% of the balance sheet effectively.
Yeah, and it's better than that if you look at the deal as it was announced. You can see that a portion of it is paid in their own cash, a portion of it is paid in our equity, which was done at a positive MNAV, a higher share price than we are today, roughly 40p compared with roughly 30p. Then an element of cash from our business, and then the staged payments after 1 year, 2 year, and 3 year. They're actually paid, all being well, out of the business's own cash flow. So it's actually less than 1% if you only include the equity and the cash component that we paid out of our PLC cash. So I think the key thing for everyone to understand is it's low risk. It allows us to protect ourselves in a tough market in the future, and it fits in with our philosophy. So it's one of many things that we've said we'd do, and we have done.
Yeah, and the one thing I'd add there too is, just for clarification for everyone out there, that we're not seeking to run like a private equity roll up kind of strategy. That's outside of our focus or skill set. We're not trying to cut costs here and synergize and rationalize two balance sheets into one. What we're looking to do is find attractive multiple acquisitions that can increase operating profits, and because that's in our view the sweet spot, the holy grail for an operating company with a Bitcoin treasury strategy. Is that you want that operating company to cover overhead and the Bitcoin to stand on its own, and that's one of the things that Smarter Web is we're a lot closer to doing than just about any other Bitcoin treasury company out there, besides MicroStrategy. And I think it's an exciting part of our strategy when the numbers make sense, and in this case, I think it very much did.
Yeah, I completely agree with you, Jesse.
Cool. So the other quite new topic for us to discuss is index inclusion. So there's actually a fair bit of confusion or lack of clarity out there about what has happened, what has yet to happen, what's the timeline look like. So Andrew, if you want to start us off with maybe an overview of the index landscape in the UK, and then what has happened.
Yeah, sure. So in the UK, there's a number of indexes. You have got the FTSE 100, and then you've got the FTSE 250. If you add those together, you've got the FTSE 350. Underneath that, you've got the FTSE small cap, and then underneath that, you've got the FTSE micro cap. If you add all of those indexes together, excluding the FTSE micro cap, you've got the FTSE all share. There's a couple of other indexes, but they're the main ones. So one of the really important things that people will remember I've said since the start is that we want to be in indexes, because we are making very good progress on attracting institutional capital, and that's one of the things about the London Stock Exchange. It's essential. If you want institutional capital, they will not invest on Aquis, apart from the odd fund manager, but the other thing about the London Stock Exchange is that you can access indexes if you're the right size, so this was all part and parcel of the plan. It's something that we were expecting. It's something that obviously we knew about before we got the official confirmation, because the RNS came out 5 or 10 minutes afterwards, and it's massively important. We spend a lot of time speaking to active fund managers about why they may want to consider investing in us, either now or in the future. But the passive money is different. The passive money is, if you're in an index, you will get that particular slice of it, subject to your size. So if you think about everything that we're doing as a whole, it's a really important part of the jigsaw puzzle. And I'm so pleased, that for me over the last 2 weeks, 3 weeks, that's one of those bits of news where when you go to bed at the end of the day and that's happened, you can't believe it, and it's probably taken more than anything else to sink in. In terms of what it really means is there's a date in the future which the index changes after the close on Friday the 21st, 20th, something like that of March, and then Monday the 23rd, I think it is from memory. That's when it sort of takes effect. So at that point you're in the indexes, so much greater visibility. What no one can give you a straight answer though on, just for full transparency, is when you get that impact on your stock, and I think the reality is it's over a period of time. So it's not like the day before, the day after, the day of, anything like that. It's there's a build up, and if you look at the volume in our stock, it's increased quite a bit the last couple of days. So I don't know whether that is people selling, which, looking at the share price, that's what tells me, or whether it's people starting to take those positions, perhaps to then sell on to the index funds, or whether it happens on the weeks that follow. What I would probably advise everyone to do is to look at that alongside everything else that we're doing and just view them as all sort of parts of the business that all add together to get us to where we want to be. Yes, I'm really pleased, but it's just another milestone along the way at the end of the day. And now that we've sort of achieved that one, then the eyes are very much on the FTSE 250.
Yeah, we'll get into that right now. So to summarize what you said there, because it's a rules-based inclusion, which is different from how things are done in the States, Smarter Web met the requisite criteria for inclusion in the all-share FTSE all-share index. And that event will happen starting 10 days from now. So it's the 20th to the 23rd. Over that weekend is when that event happens, though we have not gotten great clarity about when the buying will be, distributed. Is it within that period? Is it outside of that period? One question that folks have had is can you quantify the expected shares that will be bid for as part of index inclusion? The two numbers I've heard, Andrew, correct me if you've heard anything else, and these are estimates outside of Smarter Web, so hearsay entirely, but the estimates that I've heard are 13 million shares and 15 million shares, and those may or may not be right, but that's the scale of what we're talking about, or at least what I've heard. I don't know if you've heard anything different there, Andrew.
No, they're along the lines of what people have told me. The way that I would look at it, though, is let's call it 14 million, just to take a number between those two ranges. Yesterday was a reasonable day in terms of volume. That's over 3 times the volume of yesterday, all buys.
Right.
So, on any day when you look at the volume on the market, there'll be buys and sells. In simple terms, if there's more buys, the price will be up. More sells, the price will be down. That's generally how it works. But you're talking 3 times the volume, and we're an active stock anyway that needs to be bought in the stock. So I spoke to one of our brokers earlier today to ask them if they had clarity of exactly when it would happen. In case the MNAV allowed the ATM to facilitate some of that demand, obviously they're very much on all of that. So I guess we'll wait and see. But I think you can guarantee with utmost certainty that it's more positive to be in the indexes than not, and it's potentially considerably better. But if you think about it, so let's say it's 10, 15 million shares or whatever, that shares that adds to our flywheel effectively, because some of them may come from the ATM or other people selling them, which may drive the price up, etc. And then that brings more money into the company, allows us to raise further equity, bigger balance sheet. So everything that we do, interacts with each other, and it's all a part of building it and building it and building it. If you look at something like Strategy, what they're doing with one of their products at the moment, the fuel that gets created by all of these different actions, if you've got them done in the right way, is incredible. So it's a very important part of the journey, and it's a big achievement for our shareholders and everyone that works at the company. And let's see what happens and work towards getting in the FTSE 250 next.
Yes, yeah, I like that view of this is one additional tailwind, and there's a cumulative effect of all of those tailwinds, of all forces at all times, constantly, and we want to be heading in a certain direction. And zooming out, this is quite a cool accomplishment for Smarter Web and for Bitcoin in the UK, because of the implication of of index inclusion. this means that Smarter Web will now be in a whole lot of portfolios. I hesitate to say all portfolios, but just about. A huge portion of UK portfolios will now have some exposure to Smarter Web and therefore some exposure to Bitcoin. And if our thesis about Bitcoin is right, and it continues to grow at an average CAGR of 30% a year, and our balance sheet grows at 30% a year, then in theory, Smarter Web will be a standout performer over time that helps lift up portfolios. And also, as it performs well, if it performs well, becomes a larger and larger part of the index allocation. So, those and then that then begets more buying of Smarter Web shares from index trackers. So it all fuels our goals, and it's all driven ultimately by Bitcoin as an asset. And so long as Bitcoin continues to perform disproportionately well over time, then Smarter Web will, in theory, perform disproportionately well and become a bigger and bigger part of UK portfolios and a bigger and bigger part of these indices.
It works exactly as you've said, and it also makes the institutional conversations easier, because a lot of active managers will get judged against certain indexes. So by in theory, being one of the best performing stocks, hopefully, in a certain index, it makes it a lot harder for them to ignore the opportunity that a Bitcoin treasury company presents. And even if you look at some investment platforms, like take the one that, ultimately I had a hand in creating, Hargreaves Lansdown. If you go onto their website, you'll see that they've got pages dedicated to the FTSE 100, the 250, the all share, etc. So you get a much greater visibility of your stock. And indeed, as we've debated internally, one of the things that drove Metaplanet so well for a period of time was the extra visibility by showing up in the risers and fallers. The reality is a lot of people like to buy a riser and a lot of people like to buy a faller. So if you're, which we are, the most volatile stock on the London Stock Exchange, by having as many signposts pointing towards you as possible, assists as well. This whole thing is about driving volume into the stock. At the end of the day, we have to do our jobs right, but the market, we want it to be as liquid, as an active as possible, because that's important to the flywheel too.
Yes, that's been a very cool little bit of analysis, I believe, from Wild Goose on the community group, highlighting that since the uplisting, Smarter Web has shown up in the top 10 risers or top 10 fallers more than any other company, and that's a testament to our volatility, which is currently over 100%. I think closer to 120 right now, which makes us twice as volatile as anything else on in the FTSE 350. So that, as you pointed out, that helped a lot with Metaplanet to show up in the most volatile stocks, the attention that comes from that for traders in particular. And then you add on top of that the fact that we are stamp duty exempt for 3 years here, which is a new program and created some confusion with some of the platforms, as they didn't know how to handle that. And we got that all sorted out, and we are now stamp duty exempt for traders in the UK. And we're also the most volatile stock out there, showing up in the top 10 risers and fallers more than anybody else. And that's just another small tailwind for generating interest and attention for Smarter Web as Bitcoin continues to do what it's going to do and drive the outcomes for Smarter Web's balance sheet. So we talked about FTSE 250, worth sort of spending a little more time there. about what indexes are still ahead, and what are the scale of those, and how how much more do we have to grow to be included in those. Yeah, any thoughts there, Andrew, and then I can add to that.
Yeah, sure. So I want to get in the FTSE 250 this year. Just for the sake of balance, what do we need to do that? Then we need to raise additional capital, and we need Bitcoin to perform, but not by that much on either of those things. So I see that as very, very achievable. It's not a guarantee or a projection, but I'll be very disappointed if come Christmas time we're not in the FTSE 250. That's my near-term thing. When we'll get into the FTSE 100 is a lot harder to predict. Maybe that the only information that we should give on that is to point people towards our presentation where there is some multiples that's required on that. But clearly, once we get in the FTSE 250, it'll be a case of let's scale up it, and then let's get in the FTSE 100. So that's where we're going. As a UK company, trying to grow through the rankings.
Yes, absolutely. And along the way, every quarterly rebalance of the indices, if we are bigger than we were the prior quarter, will result in some small incremental inflow of additional tracker fund capital. So it's all, it all adds up, and we're excited about the scale of the inflows that are still ahead. Because the inflows for the all share haven't even begun. That starts in 10 days. If and when we are included in the FTSE 250, we have ballparked that at 30 to 60 million pounds of inflows to be at the very bottom of that index, and then 12 million pounds of inflows for every 100 million pounds of market cap we gain after that. So this is part of how the index inclusion helps a ton, and I think will be a really nice additional tailwind to help us get to where we're going. And it's one of the things that in our conversations with institutional investors and with various brokers, they seem to be very interested in that as a structural catalyst for the stock that is happening and will continue to happen and is hard and fast. So exciting new milestone for SmarterWeb as a company. We are now included in UK indices, and that's just the beginning of that story going forward. So glad we got
if you think about it as well,
yeah.
If you think about it, it's quite cool because it's very Bitcoin. It's very Bitcoin treasury company, and it's very smarter web. So the index inclusion, we believe will be beneficial to the price, and it's yet another thing that retail investors can benefit from before other people can benefit from. So if you look at what we've done since we became a public company, we involved retail shareholders right at the start when we IPO'd. We didn't give out deals to institutions, our mates, insiders, things like that. We involved retail shareholders right from the start. If you look at Bitcoin treasury companies on the whole are something that retail investors get before institutions. If you look at Bitcoin is something that those that put in the work, those that could get their head around it, they benefited before big institutions have benefited from it. So in a funny sort of a way, the index inclusion is just like everything else that we've done, where those that want to try and understand it, albeit by taking a bit of risk, can try and get ahead of other people. So that's pretty cool as well.
Yes, well said. Good point to end on there. Another topic I wanted to make sure to cover is our Bitcoin buy announced today, and what that means for the quarter overall. By my quick tally, we have added 31 Bitcoin this quarter, And what I really want to highlight is this may come as a surprise to folks because our MNAV has been under 1x MNAV for I think the majority of the quarter. So how is that possible, and what does that mean about our strategy in general? Any thoughts there, Andrew?
Yeah, so just one thing that I'll say before I answer the question is just for the benefit of everyone listening. I never know these questions. Obviously I can guess some of them, but I never know them before Jesse and I talk. So if you hear me pausing and hesitating and trying to think frantically, then that's the reason for it. Maybe I should ask him, but I think it's better that we do it on the fly. So yeah, you're right. We will not sell stock through our ATM when it's not accretive in terms of selling the stock, buying Bitcoin, i.e. in crude terms, a little bit above a 1 MNAV. Because our stock's been volatile, take last week as a good example. For a lot of the week it traded below, for a bit of the week it traded above. Had we been a bit I don't know what the word is, but a bit more full on with the ATM, we could have sold a bit more. But the instruction to the ATM operator has always been the same, which is, please sell the shares in line with the agreed guidance that we give you. But please don't try and hammer the share price. We're trying to share the benefit of the share price with everyone else. That's people long-term investing, short-term trading, etc. So yeah, we've sold the stock when it's been beneficial to do so. What you've also got to remember is that Bitcoin's moving a lot. The pound and the dollar have moved a lot. We convert the money in at different times. Sometimes we convert it from pounds to dollars, and we might not deploy it for a couple of days. So there are sort of variants there. We try and deploy it sort of with a mixture of the best and the quickest way. If you look at the buy that we announced on yesterday morning, you'll see the price is pretty good actually. So we've deployed as best as we can, but we're not focused on the price. We're focusing on getting the execution done in the best way possible, but also getting it into the asset because, as I've said numerously times, I personally don't believe in cash. And therefore our business strategy doesn't believe in vast amounts of cash. So yeah, I'd like it to be more Bitcoin. We've got some quite exciting things coming up, which is good. If you look at our Bitcoin yield quarter to date, it's just below -1. I think it's important to say that we've done the acquisition, the LSE uplisting, etc. It has been a tough market. Will we see that above 0 by the end of the quarter? I think everyone will just have to wait and see. Clearly we'd like it to be, but we'll just have to wait and see. But I think if we look at the quarter on a whole, away from just Bitcoin yield, I think that the company's better than it was when we started the quarter. And I'm quite looking forward to the next couple of weeks, and let's see where we finish up for the quarter. It's quite unlikely it's going to be massively positive, the figure. I don't think anyone is. I look at the companies that I look up to, which is Strategy, Metaplanet, Capital B. I like. I don't think any of the figures are massively positive, with the exception of Strategy. I don't actually know what their figure is quarter to date.
I believe it's plus 1.2%. So despite all of the massive volume they're dealing with Stretch, conditions are tough for them too. So they've only added plus 1%. I believe Metaplanet's minus 1% or 2%. So yeah, I was just trying to highlight that the volatility in our stock makes it so that there are moments where it is accretive for us to be issuing shares via the ATM, and it's only because of that liquidity, that secondary market volume, that we have added 31 Bitcoin this quarter, and we're happy that we've been able to do that. We wish it was more, obviously, but we're trying to scale the Bitcoin balance sheet so that we can get to the things we want to do, and it all adds up.
Yeah, that's exactly the point, Jesse. That's what people need to understand. So the primary metric is Bitcoin per share. How do you increase Bitcoin per share? Ideally every quarter, if not every 6 months, if not every year. So Bitcoin per share. After Bitcoin per share, you've got the size of the Bitcoin stack, and there's a massive advantage to being, say, 50 Bitcoin, 500 Bitcoin, 5,000 Bitcoin, 50,000 Bitcoin. It's considerable, and that's not just because it costs money to run a public company, which is one of the purposes of the operating business, to offset some of that cost. But it's also because size matters. Size matters in this industry more than money. Size gives you options, it gives you scale, it gives you opportunities. So our immediate internal aspirational target, I haven't used aspirational target since we uplisted. So our aspirational target for Bitcoin is to get to 5,000 Bitcoin as quickly as we can. And then we'll have another aspirational target after that. To us, that's our next line where certain things become more possible. So size matters. So if everyone can think Bitcoin per share, primary metric, as long as you can keep the Bitcoin per share roughly level, then after that, it's all about total Bitcoin held, in my opinion.
Agreed. And I just checked Metaplanet's negative 2.04% for the quarter. So we're actually right in between strategy and Metaplanet for the quarter. And that's having had the one-off costs of LSE uplisting and everything that came with it. So
well, without making any promises, let's just see. There's a couple of weeks left. Let's see if we can beat strategy.
Oh, okay. We'll see. We'll see. All right. So I think now we can shift to and probably take maybe 10 more minutes, and we can answer some of the questions that were in the comments. Thanks to everyone for putting their questions in. We had one from, actually might as well cover the one from Ben Schmidt. We answered your question about the scale of index inflows and timing. So that there's another question from Oliver about analyst coverage on Smarter Web. And this hasn't come up in the community group, so I figured we could put a little bit of a spotlight on that. Oliver's question was, I know that analyst coverage is important for institutions in particular. Is there any analyst coverage? Are there plans to increase that? And so, Andrew, any thoughts there that you want to talk about what we can say there?
Yes. So the simple answer is yes and yes. So today, as we're talking, you've got our broker Tennyson. They've done they've done lots of research notes about us. And then you've also got a broker in the States called Maxim. They've published at least one research note about us. So we've got those, they're out there. We're not allowed to publish them on our website, unfortunately. So everyone's got to make their own inquiries. That's to do with financial promotions in the UK and all the restrictions around that. So they're the ones that are out there. There's a lot of other analysts that are, and this is where we've got to be a bit guarded, so apologies for this. There's a lot of other interest in our stock. There was an email that came in today, which Jesse may not have seen yet, but Laura has passed it to Jesse, asking him to arrange a time the week after next, someone else that just wants to get to know the company from a research point of view. And there's a particular possibility, I think that's probably where we should stop talking about it, that I'm hopeful of. And
Yeah.
and I'm sure there'll be many more.
Yes, well said. I wanted to make sure to ask that question because it hasn't had a chance to be known in the community that that Maxim, the U.S. broker that we have been working with, initiated coverage on Smarter Web, but it's an institution. It's for institutional eyes only, and so that report is available. It was released a couple weeks ago now, and we can't post it for that reason. Though community members, if they're able to get their hands on it, it's probably a different story. So it's out there, and now when institutions inquire about us, we can point to that report and that desk, and they can get a first cut of an institutional analyst perspective on Smarter Web, from a U.S. perspective, which is also helpful. And then hopefully there are other things that may be coming out in the future, which would be great. And it all adds up. So we look to increase the analyst coverage into the future. Okay, and then any other? Okay, so another, I guess, really final question was, it's worth sort of mentioning how we have talked in the past about institutional interest in Smarter Web that was limited by being on Aquis, and there were a few questions in the comments that wanted a follow up on that. How is that going? Are institutions interested now that we're on LSE that weren't before?
So I'll try and answer that in the best way that I can. So it doesn't matter whether you're saying 1% or 2% of institutions can invest in Aquis, but it's going to be something like that. It's almost nothing. So that's why the London Stock Exchange is so important. And we achieved that, in a not bad timescale from when we became a public company first. If you look at the chart of Bitcoin, you'll see that the day or two after, it was when we were in London, I remember, Bitcoin, had its sort of, worst couple of days for a while. And so the other thing that we need, in part, other than the structural framework that we've got, is we need sentiment to come back to Bitcoin, wider sentiment. I'm not making excuses here. I'm just trying to be honest and upfront with people and tell them how it is. We've got a lot of institutions that we're speaking to before the AGM next week. Jesse and I have got another couple of days in London meeting with other institutions. One of them is one of the biggest investors in the world. So, and we've been speaking to them for 6+ months, I believe. So these things take time, but they are interested and they can invest. Now we're on the London Stock Exchange. What they need is no different to a lot of retail investors. They need confidence that they believe that a Bitcoin treasury company, so Bitcoin, is somewhere where they want to be invested for the next time period, normally a longer time period than a lot of individual investors may look for. So I think we're there or thereabouts. I think realistically, we probably need a couple of weeks of sort of a little bit better than flat Bitcoin price action. I'm always the optimist, and I do genuinely believe that Bitcoin is going to improve probably fairly violently from where it is at the moment, fairly soon as well. It's looking quite good at the moment, but clearly things away from Bitcoin can have an impact. I was looking at the NASDAQ 100 chart yesterday, and I think that's down from the last 6 months or something to that effect anyway. So this isn't just Bitcoin. So in very, very simple terms, you need confidence. We've got the relationships, we've got the interest. In addition to the institutional investors, we've been speaking to some massive banks that are very, very keen to work with us, global banks. So I generally think that we've got everything in the right place. We just need Bitcoin to help us out a little bit, and then things will look dramatically different. And remember, that can happen in a very short amount of time as well. So we've got everything in place. I wouldn't say it's impossible to get some smaller scale investments at the current, well, not the current price, but the current Bitcoin level. Clearly, we need a bit of a better price, because I don't want to do a deal that I don't think is in the medium to long term interest of the shareholders, i.e. we're trading below 1 MNAV, and I don't want to do it with some of the things that people wouldn't want. But yeah, I think it will happen. I just can't tell you exactly when.
Right. And I'd add to that, we also don't know if there are institutions who have been seeing a sub 1x MNAV environment, and buying shares on the market. So, we would only have visibility to, book builds, where our institutions come in the front door, basically, and the current and the recent market conditions are such that it would make more sense for them to be scooping up discounted shares in the market, and we wouldn't have visibility to that. And I'd like to sort of dovetail, I guess, my final comments, and then you can give your final word, Andrew. I agree with your sentiment about Bitcoin, and I think it's really tough for shareholders, for Bitcoiners in general, to have to wait through these periods and retain that conviction. But nothing has changed about Bitcoin, and in my opinion, nothing has changed about Smarter Web. If anything, our position is stronger than it was 6 months ago, in terms of the infrastructure that's there, ready to make the most of the next wave of enthusiasm for Bitcoin and Bitcoin treasury companies, and our relative position in the UK as the clear leader. And I think the reality that you see if you look across history for Bitcoin treasury companies is Bitcoin treasury company MNAVs and their ability to raise capital is downstream of sentiment about Bitcoin. And sentiment about Bitcoin is based on how the Bitcoin price has been trending over the prior month or 3. That's all that does it. And the past 3 months for Bitcoin has been not fun. It's been going in the wrong direction. But I'm an optimist about Bitcoin in general, and I see the widespread pessimism, and that makes me excited, actually, that those conditions only pop up when we're at or near a bottom. And maybe we go down a bit more. Maybe that was already it. Maybe $60,000 per Bitcoin was the bottom. And if you look back through time, whenever you've had a major bear market, which this at this point constitutes, a major bear market ends, and it's followed by years of Bitcoin rallying, multiple years of Bitcoin going up and to the right. And that, if that happens again, would create incredible conditions for the leading Bitcoin treasury companies in each capital market in the world. Because when Bitcoin is trending, running hot, people get excited about Bitcoin. They want more Bitcoin. And in my opinion, the best way in the world to grow your Bitcoin ownership is through exposure to a Bitcoin treasury company that has a track record of delivering Bitcoin yield, growing your Bitcoin per share. So while the current moment for Bitcoin, and therefore for Bitcoin treasury companies, is one of waiting and having to retain your conviction, that doesn't change what's, I think, ahead for Bitcoin, and the logic of what might therefore be ahead for Bitcoin treasury companies and smarter web in particular. And I guess I'll end that'll be my thoughts. And Andrew, any thoughts you want to leave everyone with, and we can end it there.
Yeah, so obviously I completely agree with all of that. And, I echo the sentiment, about how tough it is for our shareholders, I've met so many people since we listed the business that have come up to me and told me about how much money they've made, on the first couple of months. More people than I ever expected would tell me that. And then I've met people as well, that have said that they've liked what we're doing, and clearly they're not currently in a profitable position. What I hope is that, a reasonable number of those people still believe in us as a team and as a company, because I believe that we'll have the next wave. And then hopefully all those people will be coming up to me saying, do you remember the early part of 2026? It was really tough, and then they can tell me the story that everyone else has told me about how much money they've made. So of course that might not happen, but I fail to see if Bitcoin does what we believe it will do, with everything else that's going on in the industry, and I couldn't be more pumped on that side of things at the moment. I fail to see how we've not got everything in the right place, whilst at the same time understanding that it is difficult for people. People have trusted, our strategy, with their money, and obviously with that comes great responsibility, which is why we're trying to execute things as best as we can, and we believe we have got the strategy right. So yeah, we'll see, and if we're wrong, we're all wrong together. But I can't, I fail to see how that's gonna happen, and that's why I keep pretty much 100% of everything that I've got in Bitcoin and Bitcoin treasury companies, because everything else is crap.
Same. It's a test of conviction, and then every time you step back and reassess, from first principles, logic, whatever you want to call it, it's still there. Bitcoin's still the best asset in the world, and a balance sheet built on Bitcoin makes more sense than anything else. And a company that manages to increase Bitcoin per share is more compelling than just holding Bitcoin. So all those things remain true. And you're right. All we can do is keep executing and wait for Bitcoin to trend in the more fun direction.
The way to put it in very simple terms is, to date, we've both invested in Bitcoin for roughly the same amount of time, roughly 10 years. To date, Bitcoin has not let us down. But like every human being out there that's involved in Bitcoin, it has tested us at times. And that's part of the fun of it. As much as people won't want me to say that, that is why it's so fair. It rewards the people that have conviction, that put the effort into learning about it, why it is the best asset in the world. But clearly that makes it a little bit challenging at times. But purely in terms of smarter web, I've got 100% conviction that we've got all the elements in place. So in this tough market, we can make small steps forward, and then when the market improves considerably, we can make giant leaps forward.
Well said, and a good place for us to end it. Thank you to everyone for joining us for this, and we will do it again in a few weeks. All right, have a good day.
Thank you.